we do have a bullish bias for the dollar and dollar leading pairs. What do I mean by that? Dollar yen, dollar CAD, dollar Swiss, those pairs I have a bullish bias on. How's it going, fellow traders? Magic Trader here. And it is Sunday, March 24, 2024. We're going to take a look at the latest set of CFTC data that we got just on Friday. And so like we always do, we like to start by looking at the snapshot of positions held by the positions as of March 19, 2024. That was the Tuesday where the data was collected and submitted to the CFTC, and then we receive it on the Friday. So quickly, when you look at the snapshot, what sticks out? I'm always telling you to look at the change column. What do you see in the change column? Something should stick out there. Look across the pound US dollar. Massive change to the negative side. Negative 153,000. Now, if you were following along with our videos that we post each and every weekend, you would note that long positions on the pound were extremely aggressive. So they needed to take some profits. And this is why we're seeing the big negative 153 on here. So I think out of all of them, that one sticks out the most. We also have bullishness on oil. We got some bullishness in bonds, also on the S&P 500. And copper as well. We got some bullishness there. With respect to the negative side, pound and euro are the two big ones that I am looking at. All right, so now that we've done that, let's start, shall we, by taking a look at gold. Here we are with gold. And so if we take a look at long positions, we can see that they've been somewhat aggressive for some time. And 283 down to 278, that's not much of a drop, okay? And as you can see, price hasn't been doing much. We got that nice decline on the euro, we got the nice decline on the pound, but this one, not so much of a decline. So, why is that happening? Well, I have some thoughts. So let's just close this off and take a look at the 4-hour chart here. As you can see, we're going to take a look at the positions of retail traders. 71% right here. And then they closed them off to 65, and now we're at 61%. So it never was really aggressive. Retail traders were never really aggressive with their short positions. If you look at their positioning here, low 70s, nothing. What we normally like to look at is, or see, is something up in the 80s, 80 range. And then when that takes place, normally we start to see a decline when they start to offload those positions. So they never really got aggressive, retail traders, with their positions. I think that's one of the reasons why we never got the big drop. A lot of people trading gold, a lot of people speculating that it's going to go higher. We are at all-time highs up here, so there's, this inclination that price is likely going to go higher. I've searched through social media, and you can see a ton of people just speculating. So I think there's that battle between shorts and retail traders going long that is kind of holding price up here. But, as I mentioned before, we don't have any long signals on gold as of yet. So we're watching this one. We think that it's likely going to be dropping. And the reason being is because we did some historical analysis. Every time gold is up in these 280s, we start to see a decline in price. Okay, so we saw a decline, not a big one, but a small one throughout here. Is it going to continue? My bias is bearish. As it stands right now, retail traders are about 58% short, so not aggressively short. And so there's really no strong bias there. Another thing I'll point out is if you look at the coloration of the cells here, what do you see? Mostly blue, right? A little tinge of green, but mostly blue. That means the big banks don't have a bias right now on gold. So I would play it safe and not trade gold, personally. You do what you want to do, but I'm just giving you a heads up. Okay, oil. So what do we see with oil? Well, if we take a look at long positions, we can see that they aggressively pushed up long positions. 329 to 366,000. That puts things into a little bit more bullish territory, as you could tell by the coloration of the cells here. Look at shorts, very cooled off. They're not focusing on shorts whatsoever, and this is the reason why price is rallying. So we see on the weekly chart we got that slight rally, and now price is starting to pull back a little bit. Now, why is pulling back? Why is price pulling back? Well, if we take a look at oil, the 4-hour chart of oil, what's happening up here is price has contacted a supply zone, and that is what's putting the downward pressure on oil. All right, I'm not personally trading oil right now. I don't think there's any high odds trading scenarios playing out, so I am not focusing on it. US dollar. Look at the long column. It's been blue for quite some time, hasn't it? Yeah, it has. And I've pointed it out that that took place when contracts expired back on December 19. At the same time, when we look at shorts, there hasn't been much going on here with respect to shorts. They've slightly increased them since those contracts expired. 11,000, we're up to 14,000. Anything aggressive? Not really. But it was enough to put the bias on the bearish side all this time. But they've done nothing with it. Okay? So now take a look at what's happened. Price is making a move to the upside. How far up is it going to go? We don't know. But we do have a bullish bias for the dollar and dollar leading pairs. What do I mean by that? Dollar yen, dollar CAD, dollar Swiss. Those pairs I have a bullish bias on. But in terms of looking at the dollar index, there's nothing really here giving us any strong indication of what price is going to do. So for that matter, we move along. Aussie, look at this. We are at all-time maximum size for short positions. 145, look at that. That's all-time maximum. They've never had a larger short position in the history of having short positions on the Aussie US dollar. So what does that mean? Well, usually when they're super aggressive, we see rallies form. Why? Because they need to take profits on their short positions, which causes a move to the upside, and then we typically will see a move upwards. Well, that's interesting. Do I think there's going to be a big move like I just drew with an arrow? No, I don't think there's going to be that big of a move, but I'm just illustrating pressure to the upside with my arrows. But this is interesting because we are seeing evidence to suggest that the dollar pairs are going to drop short term this week, which means the other pairs, Aussie, Kiwi, Euro US dollar, Pound US dollar, we're likely going to see a move to the upside. So interesting timing because 145 is max. They're likely going to start taking some profits, and that's likely going to cause a move to the upside. All right, another thing I wanted to point out, really interesting, if you look over the history here of positions, the latest I recorded was down here, 83%. If I check today and take a look, it's 84%. Okay, so down here at these lows is 84%, which is telling me that we're likely going to see them closing these positions, and then that's going to fuel a move to the upside like that. So this is what I'm going to be watching for this week with respect to the Aussie US dollar. All right, USCAD. Now, I've written to members in the last few reports what to watch for with respect to the USCAD, and it is playing out perfectly. It's unbelievable. It's unbelievable. When you can follow along the storyline of price, you can always be able to predict what is likely going to take place with price. And what we were talking about was upside pressure. We're also talking about the banks increasing their long positions. And so take a look here. What do we see? Increasing of long positions. Just recently, they're down in the 37,000s. right? We're now at 82,000. That's super aggressive here. Look at short positions. Anything going on there? Not really. So what does that mean? Bullish bias with their positions. Bullish bias. So we're likely going to see over time a continued move to the upside. Likely. Okay? That is the bias. Is to the upside. USCAD, if we look at retail sentiment, you'll see that right now at this moment they're 86% short. 86%. Last time I checked was 82, so let's mark it now. Another one here. 86%. That's huge. Okay? So you know what that means is that they're so aggressively short, and they've been adding to their shorts all throughout this move to the upside. And now they're deep underwater on their positions. So they're likely going to switch those. They're going to say, we can't take this anymore. Let's just go long because it looks like price is just going to continue upwards. Excuse me. And then that's when the banks are going to pull it down. Likely. So bearish bias on USCAD for this week. Yes, I'd say high odds of that. Okay? So be aware, my friends. US Swiss. Are we seeing another piece of evidence that longs are the way to go over a longer period of time? Yeah. Look at that. Are those numbers increasing and becoming more aggressive, more red? Yes. Look at the bullish bias taking place. Bullish bias. So over time, do I expect price to rally up? Yes, over time I do. Short term, what do I expect? Well, let's take a look. Short term, if I look at what positions are right now with respect to retail traders, they're 77% short. Okay, 77% short. Just recently, they were 82%. So they're already in the process of offloading their short positions for long positions. Okay, but what I like to do is I like to map it out. And you know, a lot of people ask me, how do you do? Where's that the indicator that you load on your charts to get those numbers? No, it's not an indicator. I do it manually, my friends. This is how I do it each and every time. I track it. I don't think there's any indicators like this. These are new concepts that I'm introducing to the market. So I don't think there's any indicators that exist. I'm the one that's doing it because I have a major edge by looking at this. So what I see is that right now the banks are, or the retail traders are switching their shorts for longs, and it's probably going to cause price to drop like this. And simple. Okay? But over the long term, I'm seeing them acquire long positions, and we're likely going to continue with price heading higher. Euro US dollar, take a look. This one is setting up. It's looking really pretty. Really pretty. Been talking about the banks offloading their long positions for quite some time now. We had highs of 213. Now we're down to 182. That's profit taking on long positions, folks. Okay, all throughout here, profit taking on longs. And then look at shorts. They haven't become super aggressive, but you know, comparing the numbers to what they were at the beginning of the year, 100,000, now we're at 134,000. Something's going on here, right? Another thing I'll point out to you is if you take a look at the average size of longs, they're 203. We're well below that. Look at the average size of shorts, they're 120. We're above that. Okay? That's momentum shifting, folks. That's momentum shifting. Another thing I'll point out to you is look from December. Look at net positions, 152 in the positive, down to 119, down to 88, down to 48. That's since December. Okay? That's since December. That's all throughout this price action here. So all throughout this price action, this sideways ranging type price action on the euro, the banks have been greatly reducing their long exposure. So there's a shift taking place here. Big shift. And I think we've got a lot more in store coming. Right now, retail traders are 83% long. 83% long. So you know what that means? Well, if you look at the positions held by retail traders, which I've been tracking, you'll see that every time they get aggressive with long positions, which the last time they got aggressive with long positions was right down here. Look what happened. Price rallied. Okay, now we're getting aggressive with long positions. Price is likely going to rally again. All right. So just want you to be aware of that for the euro. Now let's look at pound. So here's the big profit taking I was talking to you about. Look at positions where they were. 123,000. Now they took some profits on those longs. 123 to 102. Helped fuel the move to the downside. Are we seeing any big aggressive increase in short positions at this point? No, not really. So still, you know, the bias is bullish, but it was bullish, I should say. And for it to switch from bullish to something else, it's going to take time. So right now the colorations are green. The coloration of the cells are green, which is telling us it's bullish, but you have to understand that at the beginning stage of a momentum shift, you're going to start to see telltale signs like profit taking on long positions before that sentiment catches up and it switches over. All right. So if I look at the pound US dollar and I look at the positions held by retail traders, I could tell you that right now they're about 86% long, and they were 88 just over here. So they're already in the process of switching from longs to shorts. And what will happen as they switch to shorts? Price will rally like that. Unfortunately, you know, but that's how it is. Okay. Look, this is an institutional supply area. The banks rally price up into supply, took profits on their long positions, and fueled a move to the downside. So short-term bias for this week, definitely upwards. Definitely. US dollar, Japanese yen, I like this one. I like this chart. I think it's really, really interesting. I will shift your focus to the long column. Look how aggressive long positions are. But if you look at maximum size, 237, we're well, we're very far away from that number. But 182 is pretty aggressive. And we're back at those highs again. Every time they got very aggressive with their positions, we saw sell-offs. We saw profit taking. So are we going to see that again? Well, I think there might be some profit taking, not anything of this nature. I think there's going to be something on a smaller scale. But I do believe that something big is cooking in the oven. And we do have a bullish bias on this one. Retail traders, 77% short as of right now. But I believe those numbers were bigger when I was checking them last week. And let's just take a quick look. 78%. Yeah. By one. Not much. Okay. So 78% right here. They were acquiring shorts all the way throughout here. So what do you think is likely going to happen? They're going to start acquiring longs. And the price is going to drop. And then I believe we've got a big move coming our way. Big move. Okay. So bearish bias for this week, longer term bullish bias. And last but not least, we got the Kiwi. Not much going on here with longs and shorts. If you take a look, coloration here is neutral. There is not much going on here. But since this market is basically going to do what everything else is doing, it's going to move in the same direction as the rest. And if we look at the Kiwi, retail traders are 92%. 92% long right now. That's crazy. Crazy. So you know what's probably going to happen? Like very likely going to happen? We're going to see a small push up in price. Okay? Let me do something a little bit nicer looking. How about that? Oh, that's beautiful. So we'll probably see a bullish move to the upside and then eventually back down again. All right. And yeah, that's about it, folks. Hope you enjoyed it. We do a live show every single morning at 8 a.m. Eastern Standard Time. You have to join us. We have a huge library that we're building now of live episodes each and every week. And each and every day, we tackle a specific topic. Looked at Bitcoin, the euro, there's retail sentiment, CFTC data, supply and demand dynamics, you name it, all the things that are going to put a massive edge on your trading. We're looking at it every weekday, 8 a.m. Eastern Standard Time. So hope you can join us. Would love to see you. If you want more information, www.whiteoakfx.com. That's it. Enjoy your Sunday. Love to see you tomorrow morning. So we'll talk to you then. All right? Take care.